The forbearance rate increased last month for the first time in 29 months.
What?
The Mortgage Bankers Association reported Monday the forbearance rate increased in October after more than 2 years of declines.
You're still here? It's over.
No, it's not over. And the trade group expects more pressure due to worsening economic conditions. As of October 31st, there were 350,000 U.S. homeowners in forbearance plans. That's up from 345,000 at the end of September. That's 5,000 new forbearance plans put in place just last month. The most significant increase came from Ginnie Mae loans in forbearance, up 8 basis points compared to 1 month prior. And Fannie Mae and Freddie Mac loans in forbearance also increased in October. Why? Good question. Several factors were behind this increase in forbearance requests, including the effects of Hurricane Ian in the Southeast, the diminishing number of loans bought out of Ginnie Mae pools, and the fact that new forbearance requests have closely matched forbearance exits for the past 3 months. With the COVID-19 federal health emergency still in effect, borrowers can continue to seek initial COVID-19 hardship forbearance. Did you know that? I didn't know that. If you didn't know that, hit the like button. Homeowners can also get a forbearance plan due to natural disasters or other causes. I didn't know that either. According to the data, the total for loans serviced that were current last month reached 95.7%. Sounds pretty good, but that's an actual decline of 15 basis points compared to September. In total, 44 states reported declines in the share of loans that were current in October. So nationally, people are falling behind on their mortgage payments. So if you're still looking for your first deal, this could be the time to finally get it done by getting out there and exchanging some equity for peace of mind. Meaning, more and more property owners are looking for relief. They're looking for financial relief, and they're turning to their houses for that relief. And you could be the person to give it to them and cash a check while you're at it. I put some free resources for you down below. In fact, the first one you'll see, I'll actually pay you to partner with me, and you can keep 100% of the profit. That'd be like 2 checks you get to cash. We'll be done here in a minute, and then you can click the link in the description to read why I would do such a thing. My accountant isn't happy about it, by the way. Back to the story. An uptick in forbearance requests must mean foreclosures are assuredly coming now. This is what we call a leading indicator, right? Well, according to AdamData.com, an analytics company that tracks these kind of things, U.S. foreclosure starts increased 167% from a year ago. And that sounds like a surge, doesn't it? 167%? That's a lot. And the media loves that word, by the way. There's been a surge in COVID cases, or a surge in gun violence, or a surge in foreclosures. Surge sounds so serious, and it gets clicks. I mean, they've tested it, and we fall for it, like every time. Watch out for that, though, because the word surge, and you'll see the word spike used for this too. You see, these 2 words are almost always referring to an increase statistically, because it's very easy to deceive people using statistics. In fact, you can get this book on Amazon right now. You see that? You too can learn the art of distortion and manipulation for as little as $7.44. And even he couldn't pass up on an opportunity like that. You see, the statistics you see and hear in the headlines may be factual, but to get the whole story, you've got to look also at what's actual. Here's what I mean. In Q3, lenders started the foreclosure process on 67,249 properties. That's up 167% from a year ago. That would constitute a surge in my book. But watch this. Being up 167% from a year ago isn't enough to even get us to pre-pandemic levels, of which was already at an all-time low. See what they did there? You see, we surged 167% in foreclosures. That's factual. But what's actual, they got their readers and viewers, and perhaps even you, all riled up over a number that's lower than the previous all-time low. This is dangerous, and here's why. Did you know a necessary ingredient for a recession to endure is public sentiment? It can't do it without the public's thoughts. Yes, economic shifts intensify because of how you think about them. And your nervous, uncertain thoughts dictate your nervous, uncertain actions. And it's your nervous, uncertain actions that exacerbate and provoke these economic downturns.
Stop it!
And this isn't some law of attraction thing, like what you think about comes about. Nothing like that. No. Economists have been citing this for decades. In fact, FDR, you heard of him? Yeah, he knew this too. He said,
"The only thing we have to fear is fear itself."
That was his message to the people that ultimately led the country out of the Great Depression. He started by changing the public sentiment. to that of a positive one. He got them to stop being scared. The media is constantly manipulating public sentiment, and it's causing the public to panic, because panic sells, fear gets clicks, and awareness is the first step to recovery. And now you're aware. Protect your mind, be selective about what you put into it, and question everything, even the stuff you agree with. So foreclosure starts, while rising since they terminated the foreclosure moratorium 4 months ago. That's factual. They still lag behind pre-pandemic levels. That's actual. And now watch this. What the media is reporting are foreclosure starts, 67,249 of them. That's factual. Completed foreclosures, that's a very different number, 10,515. That's actual. You see, a whopping 86% of homes that enter foreclosure do not get foreclosed. And the ones that do are expected not to complete foreclosure for an average of 885 days. That's like 2.5 years. And people are running around with their hair on fire screaming, foreclosure, foreclosure, foreclosure.
Stop it! Stop it! Stop it!
Now, we may eventually see a big increase in mortgage defaults. We might see a bunch of foreclosures. I don't have a crystal ball. But the data right now shows that we're gonna be waiting for a while before the foreclosure tsunami everyone's talking about actually hits, if it does. And if it does, we're at least 2.5 years away from it impacting the real estate market. And it'll be even longer if you live in North Dakota, South Dakota, or Vermont, where in Q3, there were less than 100 foreclosure filings in those 3 states combined. But if you don't want to wait that long for distressed opportunities in the real estate market, you're likely to find them first in New Jersey, Delaware, and Illinois, where 1 in every 694 homes are currently in foreclosure. That right there is enough opportunity for homeowners and investors to get together and create some mutually beneficial outcomes. And if you'd like to get paid to partner up with us while we do that and keep 100% of the profit from the deals that we do, you'll probably like what I put together for you over at freecourseinrealestate.com. Go there, take a look. And if you like what you see, it'll be really clear as to what there is for you to do next. What did you notice today? What did you learn? Share with me in the comments below. And who else do you know that needs to see this? When their name comes to mind, please share with them. And then like the video, subscribe to the channel, do all that stuff too if you haven't already. Thanks for watching. I'll see you next time. Take care.